Righty-o. So let's get company specific. Ioneer has signed a lithium offtake agreement with Ford, which will be supplied from its Nevada operations for electric vehicles built in America. So to take us through the detail, I'm now joined by Ioneer MD Bernard Rowe right here in the studio. Thanks for coming in. Really appreciate you making the trip into the office. But just wanted to get across just the headline details of this first. So for people who haven't seen the news, haven't seen the press release, what's happened, what's involved, and what does it mean?
So firstly, Ioneer has a lithium and boron project in the state of Nevada, about halfway between Las Vegas and Reno. It's not in development yet, but it's very advanced, so we're expecting to go into construction phase late next year. So the agreement with Ford is a contract to supply Ford with 7,000 tonnes of lithium carbonate from 2025 and beyond. And that material will go into lithium-ion batteries that will be manufactured in the United States and used in Ford electric vehicles. So this is one of the first lithium offtake agreements, full binding, bankable offtake agreements of this kind that Ford have done for domestic lithium supply in the United States, and that's a really important part of this agreement.
So what does this mean for the business and its growth prospects going forward? Because you, from I guess probably a layperson in many senses to me when it comes to this kind of space, I see an ASX listed stock, I see the relationship now with Ford. Clearly everything is towards EV and basically these companies trying to completely change the way they do business in many ways. What is the scale of, I suppose, the benefit to your bottom line, the growth potential of the company? What are the impacts for the company? And of course, this is going to really translate into investors and how they see the stock going forward as well.
Sure. So for a company like ours, one of the key reasons for doing offtake agreements like this one with Ford that we announced today is actually it helps in securing the debt funding that's required to build these sorts of projects. So these are large projects. They're sort of, 700, 800, up to $1 billion type projects. Companies like ours look to fund those projects through a combination of debt and equity. And if you want to secure debt, and particularly debt at a reasonable cost, then you really need these offtake agreements to underpin the economics of the product that you're going to be selling into the future. So in our case, Rhyolite Ridge will produce about 20,000 tonnes of lithium carbonate a year. The price of lithium carbonate on the spot market currently is around $70,000. Now that's an unusually high spike for the price. Longer term, averaging price that we had been using for our feasibility study, for example, is around about $13,000 to $15,000 a tonne. So this is a very significant economic sort of component of our future lithium production, and the contract itself, because it's legally binding and it's bankable, it means that we can use it to secure low-cost debt. And the company's already in discussions with the US Department of Energy to provide a loan to support about 50% of the capital required to build the project. So this agreement with Ford is a critical part of that because it underpins the economics, but also it places Ioneer at the very centre of US supply of battery materials that are required in order to develop a domestic supply chain around lithium-ion batteries for electric vehicles.
So I know you've already alluded to it just in a couple of your answers there, but just in terms of the next steps and then what it's going to mean and when it's going to flow through to the bottom line, what's the kind of timescales we're talking about? What should, say, again, from an investment point of view, investors be looking at in terms of when this is actually going to translate into material dollars and cents success?
Well, in terms of actually selling product to Ford, that's going to commence in 2025, so that's still several years out. But there's a lot of, time between now and then where there will be additional creation of value, because as a project becomes more certain to advance, because you've got these offtake agreements and you've partnered with world-leading auto OEMs like Ford and Ford's partners, who are the battery manufacturers, then that underpins and provides the confidence that projects like this do get built. And I think one of the key revaluations of the company is going to come when we can come out and say, well, we've put the equity in place, which we already have, $500 million US. That's already in place with our partner Sibanye-Stillwater, and we've put the debt in place. Now, to put the debt in place requires these offtake agreements. And so that's when you're going to see a real re-rating of the value of a company like ours. That's one of the major triggers or milestones, is when you've got it fully funded. And we're close, but we're not quite finished there yet on that. And this offtake is a critical part of that. Another part will be having the project fully permitted so you can commence construction, which we're expecting will happen next year. So offtake agreements, debt and equity funding, and then full permitting to allow you to commence construction are all steps in the de-risking of the project, which should equate to revaluation of the company.
Just because I really want to get this question out before we let you go, and it kind of goes back to that note out from Goldman Sachs that I'm sure you've been smashed over the head with over the last 6 weeks, and
yes,
you know, neither here nor there what it actually said. But what's your sense of the current market for lithium? The Goldman Sachs note was very bearish on the whole, that, you know, there's kind of an end to the bull market there. But when it comes to you on the ground, what you're seeing, how you're seeing things unfold in the future for the lithium space, what's your sense of things? Because it seems to me that there's still, at the end of the day, more demand than there is supply for a lot of these companies that need to revolutionise when it comes to EVs, all these other, you know, green, eco-friendly initiatives.
Sure. Yes, no, and I'm happy to answer that question. So the way we see it, in the longer term, and I'm talking about the rest of this decade and beyond, I don't think there's any doubt, and including from Goldman Sachs, that there's going to be a deficit of supply to meet the demand. And I think really what Goldman Sachs was saying, I don't speak for them of course, but my interpretation is that there could be short-term oversupply. There has been in the past. We actually don't think there will be, because our view is that a lot of the new supply that comes into that a calculation of there being a potential for an oversupply, if you look historically, a lot of that new supply never gets delivered, or it gets pushed out in time on the timeline. So often there might be a projected oversupply, but it doesn't often materialise. Now, if it can, and it has in a couple of years ago, and for a short term we saw lithium prices low, but look what we're seeing now, record highs. And in our sort of world, if you like, we look at what the US is going to need, because we're very much connected and hinged to US demand. And you know, Ford coming out and saying 2 million electric vehicles by the end, towards the end of this decade, our project will produce enough lithium for about 400,000 or 500,000 electric vehicles. So you need 5 of our projects just to provide the material for Ford just to the end of this decade. There is going to be a huge demand, particularly in the United States, second largest vehicle market in the world, and there is very, very limited domestic supply. And yes, some of it will come from overseas, but there has to be, and there will be, a domestic full supply chain from raw material all the way to electric vehicle manufacturing established in the US. It's got to happen, and it is going to happen.